Guys, this is S&P 500 weekly technical analysis for the week of December 9th. Now, as mentioned in the previous S&P 500 weekly technical analysis, that irrespective of anything, the market will remain bullish because the trend is absolute bullish on the daily and the weekly chart. So, it will move up irrespective of anything. This means that this current bullish movement is expected to continue in the next week also. But now you must notice that the S&P 500, Dow Jones and the entire stock market is heading to its expected top or the peak. And when it reaches to that point, then we can expect some good fall or a short term correction. Correction, I am not saying 10-20%, I am saying like 3%, 3 to 5% fall. So now in the previous week, S&P 500 made an all-time high at 6099.97. So just 3 cents, 6100 is the psychological level as well as my calculated resistance level. That is why again and again S&P 500 was struggling to reach to 6100 to hit, clear, sustain and close above 6100. Now question is that if the S&P 500 is struggling at 6100, then does that mean that this is the expected top or this is the expected peak? No, not yet. If this is not the top, then why the S&P 500 is struggling to move up? Why it is not giving like 1% movement within a day or 1.5% movement within a day and to move towards 6200 or so? Then to answer this question, this is the Dow Jones. Dow Jones is actually creating a problem for the S&P 500, although there is some problem in the S&P 500 itself, okay, the saturation, okay, and the overbought conditions, but the majority or the major problem is coming through the Dow Jones. If you notice, Dow Jones hit the 45,000 psychological mark on November 29th, okay. Thereafter it is struggled and then again on December 4th it hit the 45,000 breached. Again on December 5th it hit the 45,000 breached. So you might be thinking that if it has breached the 45,000 psychological mark, then what was the problem? And also on December 4th it managed to close above 45,000 for the very first time at 45,014. So if this was the case, then why the Dow Jones has failed? The reason is not the 45,000. The reason is my calculated resistance level, which is above, just above this 45,000 level. On 29th of November, on 4th of December, on 5th of December has failed. Continuously it failed. It was rejected by my calculated heavy resistance level. So that bearish pressure in the Dow Jones is putting the pressure on the S&P 500, and that is why the S&P 500 is struggling along with its own weight, because it is also around the saturation and the overbought levels. So now what exactly is going to happen in the next week, in the week of December 9th? So I will discuss the bullish movement, bearish movement, levels, zones, the psychological marks, etc. and the conditions in detail in this S&P 500 weekly technical analysis. So now before I discuss the agenda of this S&P 500 weekly technical analysis, let me give you a quick recap of what I predicted to happen in the S&P 500, Dow Jones and in the entire US stock market in the previous week, and what actually was seen or how accurate were the predictions. So as predicted in the previous weekly technical analysis, that on Monday, on December 2nd, either there will be a gap up open or irrespective of any open, there will be an initial or intraday bullish movement. So on Monday, December 2nd, we have seen a gap up open. So next day, there was a heavy gap up open after giving two closings inside the zone. And after this heavy gap up open, S&P 500 moved up and made an high around 6090. So why it moved only to 6090 and not to 6100? So this was my midday update to my Patreon community members, and here I mentioned that even if it breaches the 6100, then also it will come down and is expected to settle around 608x, where my heavy resistance level is. This means that at around my 608x heavy resistance level in the bull side will be the best case scenario for the rest of the day, whereas the bearish side will remain limited to 606x. If you notice, on Thursday, on 5th of December, the high was 6095 and the low was 6072 and the closing was at 6075. This was on Thursday. And in my midday update to my Patreon community members on Thursday, what I predicted is that now for the rest of the day, for around 4 hours, the S&P 500 is expected to remain in between 6076 and 6100, and this is highly likely to happen. On Friday, on last day, yesterday, December 6th, if you notice, the high was 6099.97 and the low was 6079.98. So in the midday update to my Patreon community members, I have cleared these two conditions. If the S&P 500 trades in the open equal to low condition and never breaches its open price, then it is expected to trade in between the open price and a level beyond 6100. Okay. Second condition, if the S&P 500 breaches the open price, then the movement is expected to be in between this my strong support level and 6100. So what we have seen is that in the mid of the day, S&P 500 breached the open price. That is why this condition was applicable. This means that the movement will now be in between this my heavy support level and the 6100. So guys, in the previous week, or just like the other weeks, the movement was as expected, anticipated and predicted. Through these daily precise updates of the S&P 500, Dow Jones and the market, which I give to my Patreon community members every day from Monday through Friday. And guys, if you also want to join my Patreon community in order to get these daily precise updates of the S&P 500, Dow Jones and the market every day from Monday through Friday, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. First point of the agenda is the S&P 500 technical analysis on the weekly chart. Weekly chart means the big picture, the long-term picture for a month, for 2 months or for a quarter. Now the good thing is that on the weekly chart, market is absolute bullish, and the concern or the problem is that the saturation and the overbought condition. Okay, that is why I am saying that any more bullish movement is expected to remain limited if the market continues to move up. Okay, because then there will be saturation and overbought, and then it will have to give up. So I will discuss more on this, the weekly chart, in this the section, and also I will show you the weekly chart, okay, technical indicators and everything. Second point of the agenda is the S&P 500 technical analysis on the daily chart. Now daily chart, you can clearly see bullish movement, continuation of the bullish movement, and because of this one red candle, okay, earlier S&P 500 was hitting the saturation and the overbought, but now because of this candle it has got some relief, and the S&P 500 is means it has that potential, or it is technically allowed to remain bullish or to move up for next 2 or 3 days, to remain bullish at least for 2 or 3 days, okay, without hitting the saturation or these the technicals. Okay, I will discuss more on the daily chart and I will show you the candles and everything. Third and the last point of the agenda is the probable movement of the SP 500 from December 9th, which is Monday, to December 13th, that will be Friday. So from Monday to Friday next week, the week of December 9th, whatever is going to happen, I will discuss in detail in this, the third and the last point of the agenda. Just like what I mentioned in the previous S&P 500 weekly technical analysis, that it will remain bullish. These are the bullish conditions. This is the bearish condition. Okay, in the bullish side, it can move up to this okay, to this level or zone at max. Okay, and it will be heading to this so and so. Okay, And guys, let me remind you that all of these three sections are interrelated, are interconnected. This means that, and when I say the probable movement, so I already discussed 30 to 40% of the probable movement in the first and the second point of the agenda, because I discussed the candle and the patterns and some more important things. So that is why it is highly recommended that you should watch all of these three sections in order to understand what is going to happen in the S&P 500, Dow Jones, and in the entire market in the next week, whether it will remain bullish or bearish, or there will be kind of consolidation, etc., etc. So now guys, I am going to begin with the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart. Now guys, this is the weekly chart. W means the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay, so if you are new to my channel, then let me tell you the importance of the weekly chart. Weekly chart is the trend setter. Okay, so when we say like this is the bullish trend or this is the bearish trend, then bullish or bearish trends are derived through the weekly chart. Okay, that is why, for example, here, okay, or here, or here, if you look into the daily chart, then you might be thinking, okay, the trend has changed, the trend is bearish. Okay, but on the weekly chart, no, there was no change, so trend was bullish. In the bullish trend, there was just a little fall and then it moved up. Okay, so yes, now first comes the candle. This is the last candle, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, and also for the Dow Jones and the market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now this is the last candle, the last weekly candle. So although if you measure, there was a limited, only just 0.98 or just 1%, okay, movement in the entire week. So this 1% may look like, you know, very limited, very little movement. Okay, and also the candle is normal. Okay, it's simply a bullish candle. There is no defined shape of the candle. Okay, but the most important part of this, the candle, is its closing. Its closing is above all of the previous candles and the recent highs it make. Okay, and other than that, if you notice, the open of the same candle is also, or it was also above the closing of the previous candle, because on Monday there was a gap up open. Okay, and the gap up open was predicted in the previous S&P 500 technical analysis. Okay, so all of these makes this candle a heavy bullish candle, although there is no defined shape or nothing, but all of this makes this candle a heavy bullish candle and allows the S&P 500 to continue its bullish journey, to continue its bullish movement. That is why in the last week we have seen that it was trying to move up but struggling. Okay, fine. Under normal circumstances, if there comes any struggle, then market gives up. Okay, however, S&P 500 did not do that. There was a little intraday little fall, 0.3%, 0.4%, but it corrected. Okay, so this is the bullishness, right? Simply continuation of the bullish movement, bullishness, bullish momentum. Okay, everything. Now let's see whether the same is there in the Dow Jones or not. This is the weekly chart of the Dow Jones. Okay, now why I am analyzing the Dow Jones? Because most of the time, see, S&P 500 and Nasdaq are the tech indices. Okay, so most of the times, okay, we might get a false reading. That is why I always consider the Dow Jones. Okay, because when both of the charts are analyzed, S&P 500 and the Dow Jones, then we get a very clear picture. And that is the reason that when I analyze both of these, the chart, okay, and I consider and then comes my calculated support and resistance levels, okay, then the hidden hacks, okay. When I combine all of these, okay, then I am able to give these accurate predictions, okay, or these near precise predictions to my Patreon community members, okay, every day from Monday through Friday. So now here in case of the Dow Jones, okay, it is creating a problem. The problem in a manner that although the open was above the closing of the previous candle, but the closing is below the closing of the previous candle. Also it is a red candle. But the good thing is that the closing is above the open of the previous candle. This indicates that yes, market is struggling, Dow Jones is struggling, okay, but this struggle does not mean that the market is going to come down or there will be heavy fall. This simply indicates that there may come a little more weakness, 0.2%, 0.1%, 0.3%, means a little weakness, okay, but irrespective of anything, or eventually, okay, at last it has the potential to recover and to trade bullish, okay. So now this is not see, this candle is indicating the continuation of the bullish movement, okay, but at the same time the heavy bullishness is not seen, okay, and it is also showing some weakness. There is no change in the trend, bullish movement, bullish trend, it will be there, but with some weakness. However, in case of the S&P 500, it is heavily bullish. Heavily bullish. Everything is bullish. Okay. No weakness, no bearishness, nothing. So when I combine the S&P 500 and the Dow Jones, then it is clear. Continuation of the bullish movement. Number one, both of the candles are signifying. Okay. Bullish sentiments are there. Okay. And any fall will be handled. Okay. Now these candles do not confirm any gap up open. In the previous S&P 500 weekly technical analysis, okay, it was confirmed, or it was very much clear that either there will be a gap up open on Monday, or there will be, or irrespective of any open, an initial or intraday bullish movement. It was very much clear in the previous S&P 500 weekly technical analysis. But this time no, a gap up open is not confirmed. Through the S&P 500 on Monday, an initial or intraday bullish movement can happen. Yes, so there is no doubt about that. But the Dow Jones will create a problem. Okay, so Dow Jones means, when I say problem does not mean that it will come down heavily, 1 or 2% fall. No. Problem means that it will keep pressure, or it will keep the entire market, including the S&P 500, Nasdaq, okay, in the pressure. So even if the S&P 500 and the Nasdaq will try to move up, then also we will see visibly, okay, we will see just like what we have seen in last 2, 3, 4 days, and the same was predicted, okay, through the daily updates to my Patreon community members, that you can see. So I have mentioned to my Patreon community members that you can see it with your eyes, that whenever it try to move up, it will struggle. Okay, at first my calculated resistance level, and even if it breaches this my heavy resistance level, okay, then comes 6,100. Now 6,100 is the psychological mark as well as my calculated resistance level. Okay, so this means the bullish side movement will be slow. It will be slow, dull movement, dullness will be there. Okay, so I hope this everything is clear through the candles. Now let's analyze the technicals and let's see what is happening. In terms of the technicals, clear fan out in the moving averages, bullish. Okay, S&P 500 bullish through the moving averages on the weekly chart. S&P 500 is bullish through the Ichimoku cloud on the weekly chart. S&P 500 is bullish through the Bollinger Bands on the weekly chart. Now MACD heavily bullish. S&P 500 is bullish through the MACD. S&P 500 is bullish through the stochastic RSI on the weekly chart. So MACD and the stochastic RSI both are bullish on the weekly chart. And what do MACD and the stochastic RSI represents? So if you have subscribed to my YouTube channel for last many months or years, or if you are my Patreon community member, then again and again I have repeated that whenever MACD and the stochastic RSI are aligned in a particular direction, then that direction becomes the direction of the market or the stock, because these two brings the momentum. Now they are bullish means bullish momentum, if they are bearish means bearish momentum. And guys, one more thing, if you are watching the technical analysis or my videos for the very first time, then all of these technical indicators are modified. Okay, so modified in a manner that if you apply the same technical indicators on your charts, then you will get different readings. Okay, so I modified, okay, and I did some research and I modified my technical indicator so that I can predict the movement even before it happens or it is seen in the market. Okay, bullish, yes, so everything looks good. If everything is good, then what is the problem? Same problem as predicted in the last week also. Saturation and overbought. It has reached to the junctions wherein any more bullish movement. So last week also I mentioned that 1-2 weeks or best to best case 3 weeks, okay, we can see continuous green candles. Okay, because once it reaches to these the levels, now if next week if it trades above the closing of the last candle, that was 6090, if it trades above this, this means that it has clearly entered into the saturation and the overbought. Okay, so this means that again dullness, dull movement. Okay, then some overstretched conditions will be there. These a lot of conditions will be there. So bullish movement will be there, or bullish movement can happen, trend is bullish, but dullness, we can expect dullness because now it is reaching to the top. And also next to next week, okay, in the week of December 16th, okay, there will be the FOMC meeting, okay, and then they will decide whether to go for rate cuts, okay, or to pause. Now as of now, S&P 500 is 100% absolute bullish on the weekly chart. Dow Jones, okay, almost the same condition was seen. Okay, the same moving averages, Ichimoku cloud, Bollinger Bands, everything. Any change? No change. So the same thing, yes, last week, okay, it actually entered into the overbought and the saturation. It is also okay, and still, even though there's a limited or little red candle, it is still at the same point. Okay, this means that any more bullish movement in the Dow Jones will also create the same problem. This means that maximum 1 or 2 continuous bullish candles weekly, I'm talking about the weekly candles, okay, maximum 1 or 2, okay, and then irrespective of anything, even if the Federal Reserve Chairman or the Feds goes dovish, then also, okay, the bullish movement will be restricted and it will have to come down. Okay, so now, yes, so Dow Jones is also 100% absolute bullish on the weekly chart without any doubt. Okay, this means that the trend is absolute bullish, there is no change in the trend. The only problem is the saturation and the overbought. This saturation and the overbought is now putting pressure on the market. Okay, so I will discuss more in the last point of the agenda, that is the probable movement, that how the market can come out of this particular condition and then continue its bullish journey. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Okay, now first comes the candle. If you notice, candle, okay, the closing is not equal to the high and there was no open equal to low condition. It is just a normal bullish candle, just a normal bullish candle. There is no defined shape of the candle. Okay, the only important point of regarding this the candle is that the closing of this candle is above the closing of the previous candle and also closing of the previous candle. That's it, okay, nothing else. This does not confirm any gap up open on Monday. Okay, this simply says that the bullish movement may continue, but because there is also some weakness, so S&P 500 may show some struggle at the time of open on Monday. However, because the closing was above the closings of the previous, all of these are previous candles, okay, so this says that, and also the trend is bullish, absolute bullish on the weekly chart and also in the short term, okay. Considering all of these factors, on Monday it says that irrespective of any open, we can expect an initial or intraday bullish movement. That's it and nothing else, okay. No heavy bullish momentum, no heavy bullishness, okay. Now Dow Jones, last candle of the Dow Jones, okay, a daily candle. Now this is a problem because it's a good bearish candle, okay, number one. Number two, the closing of this candle is closing is below the these previous candles, not one but 1 2 3 4 5 6 7 8 candles, the closing of the previous 8 candles, okay. This does not confirm the continuation of the bullish trend. Now this does not confirm any gap up open, this does not confirm any gap down open, this does not confirm any initial or intraday bullish movement. This simply says that there is some weakness, and this weakness can be seen or felt on Monday initially, okay. And also if you look into, there is a picture, there is a moving average, then there is a trend line, so this makes sense that when it comes down and sustains, okay, and recovers, then it will allow the S&P 500 and the other indices to move up. And if it comes down and at the same time the S&P 500 is holding and sustaining bullish, okay, it comes down, sustains, recovers, then S&P 500 will breach the 6100 and will be trading beyond 6100, okay. Well, all of these are conditions I will discuss in the last point of the agenda. So through the candle it is very much clear. So now combining the candles or the outcome of the candles of the S&P 500 and the Dow Jones, this simply says that some weakness is expected to be felt on Monday, okay, initially, okay, initially in the initial hour or 2 hours, okay. Or also we can expect, okay, even like it was saying initial or intraday bullish movement, but the Dow Jones is saying initial or intraday bearish movement. So this means that mixed reactions, okay, bullish, bearish, intraday, but initial weakness we can expect, okay. However, this weakness does not confirm any gap down open and does not confirm a heavy fall, okay. So let me just clear this point. Weakness means like 0.2%, okay, fall, 0.1% fall, or in terms of or in simple terms, okay, whatever happens it will sustain at my heavy support level irrespective of any fall or anything, simple, okay, no rocket science. Now let's discuss the technicals, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates every day from Monday through Friday, S&P 500, Dow Jones, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And if you want to learn these the premium hacks, okay, modify technical indicators, strategies, calculator in order to make 5% to 15% on a monthly basis, okay, then you can visit the shop section. I have given the link in the description of the video and also in the comment section. Now in terms of the technicals, clear fan out, moving averages, S&P 500 is bullish through the moving averages on the daily chart. S&P 500 is bullish through the Chimoku cloud on the daily chart. S&P 500 is bullish through the Bollinger Bands on the daily chart. S&P 500 is bullish through the MACD on the daily chart. S&P 500 is bullish through the stochastic RSI on the daily chart, okay. Everything is good, everything is bullish. If that is the case, then what is the problem? Problem is again the saturation and the overbought. It is at the junction, okay, or it has simply hit the saturation and the overbought, okay. And the same thing we have seen on the weekly chart. That is why I am saying dull, okay, dull or dullness, okay. And the same I have mentioned to my Patreon community members, okay, especially on Thursday and Friday, that we can expect dull or dull movement or dullness, okay, especially in the bull side whenever it try to move up, but the fall will be contained, fall will be limited. This means very limited movement, okay, in between these numbers. Dow Jones. Dow Jones moving averages is still bullish, the same, almost the same condition. Moving averages, because it has entered into the cluster of the moving averages, so that can be a problem. Problem is stochastic RSI is bearish, and the most important part, MACD. MACD is at the junction wherein if there comes no heavy bullish candle on Monday, in that case there will be a confirmed bearish crossover in the MACD of the Dow Jones. Once the MACD goes bearish, stochastic RSI is already bearish. Then, as I mentioned earlier, and also if you're subscribed to my YouTube channel for last many months or years, then there will be a bearish momentum. The trend will not change. Okay, long-term trend will remain bullish. This means that only and only if there comes a heavy bullish candle on Monday in the Dow Jones, then this bearish crossover will not happen. Okay, and also if there comes a heavy bullish candle on Monday, then this bullish candle should be strong enough to clear the 45,000 and also my calculated resistance level, which is above the 45,000. Okay, so when that happens, then there will be a slip, and when there will be a slip in the MACD, then this will allow the continue more bullish movement, okay, in the entire US stock market, not just the S&P 500 or the Dow Jones. Okay, however, if there comes a little bullish candle, a small bullish candle, or any bearish candle, then 100% there will be a confirmed bearish crossover, and then for now the bullish movement will be restricted in the entire market. Okay, and then S&P 500 will also be compelled to come down. Okay, although this the bullish movement will be restricted, but and this a downward movement will be there, but this downward movement will not be heavy or very heavy. It will be limited. Market will sustain and then will try for the bullish movement. Anyway, so I will discuss more of this in detail in the next point of the agenda. I hope this is clear, the MACD. Okay, that is why I always consider and analyze the Dow Jones along with the S&P 500. So now the Dow Jones on the daily chart is only 80% bullish, and it will directly from 80% to it will go 50-50. Okay, on Monday if there doesn't come a heavy bullish candle, directly 50-50, and this 50-50 will be more into the bearish side. Okay, so so what we have seen is that S&P 500 on the daily chart is 100% absolute bullish. Okay, also at the saturation and overbought. Dow Jones is 80% bullish. Okay, this means that overall the market is bullish, the trend is bullish, the momentum and everything is good, but through the daily charts the momentum is not heavy. Momentum is dull. Okay, but this dull momentum is the bullish momentum, not the bearish momentum. It is the bullish momentum. Okay, but guys, whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500, which I give to my Patreon community members every day from Monday through Friday. So I give the pre-market update before the open of the stock market so that members can prepare for the day trade. Then I give the midday update, okay, after 3 hours, and this helps the members to correct the trades and to prepare the trades for the rest of the day to the end of the session. Okay, just like I mentioned that it will remain in between these two, or it will close at or around this particular level, then then this happens, right? And then comes the final update. Okay, it is given before the closing, 1 or 2 hours before the closing of the stock market, so that my members can prepare their trades for the next day. And guys, it is not just about these daily precise updates of the S&P 500 and the Dow Jones, which I give to my Patreon community members every day from Monday through Friday. But I also give the stock market opportunities in the premium stocks of the US stock market. top 20, top 30 companies of the US stock market or the US economy, the top companies, the blue chips. Okay, so I gave minimum 5 to 10 opportunities every week in the premium stocks of the US stock market. So guys, if you also want to get these the premium opportunities and daily S&P 500 analysis updates, movement, momentum, and also for the Dow Jones and the stock and for the entire US stock market in a manner, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will notice that there are these 3 levels or 3 tiers. Now this is the all midweek update videos. So I give the same technical analysis, technical video analysis with all of the levels, zones, exact movement. So this is generally given every Wednesday before the open of the stock market, 3 to 4 hours or 5 hours before the open of the stock market, so that my members can prepare their trades for Wednesday, Thursday and Friday. Okay, so this is very detailed analysis. Okay, so this is all midweek update videos. This is daily S&P 500 updates for non-US Canada residents. This is the daily S&P 500 updates for US Canada residents only. So when you subscribe to either of these, then you will be getting all midweek update videos, whatever you are going to get in this level, and the daily SP500 analysis, updates, movement, levels, zones, momentum, everything, bearish, bullish, everything, and the stock market opportunities minimum 5 to 10 every week. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, pre-market update, midday update, final update, and stock market opportunities. And they are very well aware of what is happening, what is going to happen, and why that will happen. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500, Dow Jones, and in a manner to the entire market, that what is going to happen in the stock market in the next week from December 9th, which is Monday, to December 13th, that will be Friday. So now let's first discuss the most important event for the next week, that is Wednesday. Okay, 11th of December. Now on 11th of December, before the open of the stock market, pre-market at 8:30 a.m. Eastern time, okay, US and Canada Eastern time, CPI, core CPI data will be released. Okay, what is this? This is the inflation data. Okay, inflation. And this is the major or the most important event for the next week. Okay, based on the data, whatever will be the outcome, if the outcome is neutral or positive, then it will be considered as positive only. If the outcome is bearish, okay, then only it will be considered as bearish. But this bearish outcome, if okay, only and only if there comes very like exceptional data. Okay, although chances are only 1% of that exceptional data. Okay, if that comes, that very heavy, very exceptional data, then only there will be a heavy fall. Otherwise, even if there comes, bearish outcome, okay, just normal, that the inflation has moved up a little, okay, means a normal bearish outcome, then also the fall will be limited, or any bearish side movement will be limited. Okay, so but if the inflation okay comes down further, okay, then that will be a relief, then that will be seen as positive. Positive means a good gap up open and then bullish movement, even though the market will be heavily saturated overbought, but okay, this will help the market to move up. okay, and to remain bullish, okay, in that condition for next at least for 1 or 2 days. Okay, so this will be the most important event for the next week. Now comes the bullish and bearish movement and the numbers. So guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And if you want to make 5% to 15% a monthly basis, okay, and you have some technical knowledge, okay, then you can learn these, the hidden hacks, the modified technical indicators, trading strategies, premium calculator, okay, all of these are products, the programs. So you can visit the shop option on my Patreon page. I have given the link in the description of the video and also in the comment section. So now what we know is that, let's start with the Dow Jones, okay, because this is very, very significant. Dow Jones failed to sustain at the heavy support level, which was keeping it bullish. So in my final update yesterday on Friday to my Patreon community members, I have emphasized that the real problem may happen or will happen if the Dow Jones closes below this heavy support level, and the Dow Jones did exactly the same, because this can force the entire market to go for a shortfall 1% to 1.5% before the S&P 500 recorrect itself and go for 6,100 plus. So now you can understand the importance of my calculated support and resistance level, that the Dow Jones failed even though it closed above 45,000, but it failed because it failed to close above my resistance level. That is why we are seeing this. And now the Dow Jones failed to sustain at that the strong support level. Okay. So now what will happen to the S&P 500 in this manner, and what will happen to the Dow Jones? Now clearly there is a moving average in the picture. This moving average is heavy, okay, and is capable of holding the fall. Okay. Now this will be Monday. So on Monday there will also be the trend line, okay, in between these some moving averages, okay, and these two moving averages are heavy, and this the red one itself is heavy. This means that now Dow Jones, even though it is bearish and it should come down because there was a failure, it should come down, but now there is a heavy support through the moving averages and the trend line. This will hold the fall. This will absorb the bearishness because the trend is bullish. That is why this zone is strong enough to hold the bearishness or to hold the fall. The problem will happen only when it loses, okay, the zone. Anyways, that I will discuss after the bullish movement. So, but chances are good considering the S&P 500, okay, the movement in the S&P 500 and the Nasdaq, that the Dow Jones will find good support or heavy support at this the zone of moving averages and the trend line. Okay, now when the Dow Jones sustains here, see, Dow Jones will come down, okay, it will sustain. So the same bearish pressure will be seen in the S&P 500. Okay, let me make these candles bigger. So the same bearish pressure will be seen in the, or will be felt in the S&P 500. But now the S&P 500 is trading above the very heavy zone, okay, and after this the heavy zone there is a heavy support level, okay. So because of this heavy zone and the support level, any fall in the S&P 500 will be limited, okay. So this means that the trend is bullish or the trend is absolute bullish and the fall is expected to be limited. So means everything is and the same time Dow Jones is also expected to be sustained, okay, at this the zone. So any fall in the entire market, in the entire US stock market is expected to be limited, okay. Limited means what? Limited means you can say around 1% or like less than 1%, because the Dow Jones is also, Dow Jones will find, okay, somewhere around means the same less than 1% fall, okay, there. So as long as this condition is fulfilled, I'm not saying S&P 500, no, I'm saying Dow Jones, okay, because S&P 500 will feel helpless if the Dow Jones loses the zone. because if the Dow Jones loses the zone, then S&P 500 will lose at first the support level, then it will try to sustain at this strong support zone. Okay, it will try to sustain, it will try its level best to sustain at this zone. Okay, but because the Dow Jones will lose the zone, and if there comes two consecutive closings below the zone, then S&P 500 will eventually fail after trying, after struggling for 4 hours, 3-4 hours, or for the entire day it will struggle, and then eventually it will fail. Okay, will fail, and then will be coming down to and then yes, in that case we can anticipate 6,000, okay, 6,000 into the picture, or simply 59xx. It will open the door to 59xx. Okay, and yes, you must understand one more thing, that for the continuation of the bullish movement in the entire market, this, the Dow Jones must sustain and must get a bullish reversal. Okay, now it was like this, it comes down and moves up, then next time it will be able to clear the 45,000. Okay, close above 45,000, but the most important part is that it will also be able to clear and close above my heavy resistance level, which is above the 45,000. And only when it sustains, when it closes above my heavy resistance level, which is above 45,000, a little above 45,000, okay, then only there will be the continuation of the bullish movement, more bullish movement, and then as Dow Jones will be heading to its peak, okay, expected peak, and also the same will happen to the S&P 500. S&P 500 will also be heading to its expected peak, okay, to its peak. Okay, so this means that this is very, very important. Yes, now one more thing, bullish movement. Now bullish movement in the S&P 500, because the S&P 500 struggled at 6,100, which is the psychological level as well as my calculated resistance level. That is why it is heavy. So once there comes a closing above 6,100, once there comes a closing above 6,100, then what will happen? This means that the Dow Jones has sustained, okay, and then it won't matter as such, because even if the Dow Jones sustains but closes as red, okay, doesn't matter, because in that case S&P 500 has already closed above 6,100. This means that now the S&P 500 will take the lead, or it will come into a condition wherein it can drive the bullish movement in the entire market, including the Dow Jones. But this zone, the condition of the zone, will remain applicable as is without any doubt, no matter what is happening in the S&P 500 or Nasdaq or so. This condition will remain as is. Okay, but closing above 6,100 puts the S&P 500 in a safe or in a comfortable bullish condition, bullish position, wherein it is allowed to move up further towards its expected peak or its expected high, all-time high. Okay, and also remember, now any movement above or beyond 6,100 will be dull, or is expected to be dull. Okay, dull until when? Dull until Wednesday. Okay, if on Wednesday the inflation data is seen neutral, then also it will remain dull. If the data comes exceptionally good, means the inflation has come down heavily. Okay, if the data is exceptionally good, it has come down heavily, then there will be a heavy gap up open, it will move up. Okay, then, and that will be the only case when we will see, okay, there's a good bullish movement, and then within a day it can hit its expected top or its expected all-time high. Okay, or the next day it can. Okay, so until Wednesday morning, okay, this situation, and then on Wednesday, depending on neutral, bearish or bullish. Okay, but if you are my Patreon community member, then you need not to worry about, okay, these things, because I give you the pre-market, midday update, final update, and you will get, so you will know, okay, whether it will remain dull or heavy, okay, or means what kind of situation will be there. But this is there, 6,100 and so. Okay, bearish movement. Okay, as I mentioned, that if the Dow Jones loses the zone, there comes two closings below the zone, although we will wait for only this, the one closing, because it has already lost the the strong support level. Okay, so two closings means 100% confirmation, one closing means 80% confirmation. Okay, then this means that 6000 and then 59xx will open. Okay, but as long as it is sustaining here, okay, this means that S&P 500 is safe and is safe at the zone. It will sustain at the zone, recover from the zone, and will move up further. So what does this mean? Irrespective of anything, market is bullish, market will remain bullish, that trend is bullish, that trend will remain bullish, trend is not going to change anytime soon. Okay, there is one more condition, one more thing. Okay, we should also consider that. Why? Because next to next week, in the week of December 16th, okay, Tuesday, Wednesday, okay, FOMC meeting is there. We can expect consolidation. Consolidation means a situation 6100 bullish movement restricted, zone bearish movement restricted. Okay, zone bearish movement restricted. So irrespective of anything, okay, and this is missed because sometimes we have seen that when this kind of situation is there, that market doesn't want to give up. Okay, but at the same time it is struggling to move up. It doesn't want to give up, but it is struggling to move up. Then it has no other choice but to enter into the consolidation. Consolidation means up, down, up, down, up, down, up, down, just like pendulum. It won't go anywhere. It won't go bullish, it won't go bearish, but it will keep on oscillating between two levels or two zones. Okay, so by Monday it will be clear, Monday or Tuesday, that whether it will remain in the consolidation for next 7 or 8 days or not. And if it remains in the consolidation, and if you are my Patreon community member, then I will give you the consolidation zone, and it will keep on oscillating up, down, that the zone. Okay, and in that case the consolidation zone may extend beyond 6100. Okay, so this consolidation will be because only and only because of the FOMC meeting, otherwise no. Okay, but even without the consolidation, okay, the situation doesn't look good because it is struggling to move up and it doesn't want to give up. Okay, so the same thing. That is why this strong zone in the Dow Jones will play a very important role, very critical role in the next week, especially on Monday. Monday will be very important. Why? Because on Monday, whether there will be a bearish crossover in the MACD or not, it will be very much clear. Because if there comes a bearish crossover in the MACD on Monday, then what will happen? In that case, the MACD will be bearish, Dow Jones stochastic RSI will be bearish, the momentum will be bearish. Then there will be heavy probability that Dow Jones might not be able to sustain. Okay, although we will wait for the closing. Okay, there will be good probability that the Dow Jones might not be able to sustain at the zone, or it will have to struggle to sustain at the zone. Even if it sustains at the zone for one day, then the next day. So until and unless it recovers this heavy support level, this heavy support level, okay, there will be no relief. Okay, so this the bearish MACD can really, okay, it will bring more problems to the entire stock market, including the Dow Jones, and and that impact will be seen or will be felt on the S&P 500 heavily. But guys, whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500 and the Dow Jones if you are my Patreon community member. And if you are not, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. And guys, if you want to learn these are premium hacks, technical indicators, trading strategies and everything in order to make 5% to 15% on a monthly basis, okay, and you have some technical knowledge, then you can participate in these programs. I have given the link in the description of the video and also in the comment section. You can visit my Patreon page and there you will see the shop option. Okay, in the shop option you will find all of these products and the programs. So guys, once again, subscribe to my YouTube channel if you have not yet subscribed, and if you have liked this video, then hit like, and if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of December 9th. means from December 9th, which is Monday, to December 13th, that will be Friday.